everyone, and welcome to a product market fit for fintech webinar. My name is Andriy Gubynskyi, and I will be a host today. This recording will be slightly different from the live version that we had last Thursday. Unfortunately, I forgot to unpause our recording, and we have a huge demand on this material. That's why I'm going to record this webinar again. It will be without the live Q&A session, but I hope and I will do everything to make it the same, structured and full of the insights as I did last time. So let's jump to agenda. A few words about myself and about craft innovations, what we are doing in our company, and then we jump to product market fit definition and PFM pyramid. And then focus on metrics, benchmarks, and methods to validate PFM. And at the end, I have some special giveaway for you. So I hope you will enjoy this session. I founded Craft Innovations in 2018, and since that I'm passionate about making this world a little bit better place by helping you guys deliver great product experience to your customers. I'm also giving a lecture in IMI Kyiv Business School regarding the product innovation and customer experience management. As well, I'm a mentor in European Bank for Construction and Development Startup Ventures. Also co-founded a couple of startups in retail and loyalty, customer loyalty industry. So the Craft Innovations, a global UX research and design firm. Why global? We work more than 32 countries across the globe, Europe, North America, Asia, Latam. And in our company, we help financial institutions innovate faster and by converting user insights and exceptional customer experience. And to achieve that, we have three main pillars in our company. First one is dedicated to customer research and product for market fit validation. The second one is all about the product concept and user experience design. And the third one, it's usability audit and product performance enhancement, where we help help our clients to improve existing digital products to make them, better, get better financial results from running them. So, huge experience in fintech industry, work with MasterCard, Private Bank, BCU Financial, Canada Visa, Victoria Bank, and many others. And we have a vast experience inside the industry. So we work with the products like debit and credit cards, customer value propositions, premium banking service model, and premium banking products, lending, buy now, pay later products, financial products for kids, SME banking, in-branch experience, all kind of digital touch points, web app, audit, design, usability testing, development, and so on. So, and all experience that we got from these products, combining with the methodology knowledge, I'm going to share with you, and all tools, metrics, approaches that I'm going to share with you today, they are validated by our own hands, and we use them into the real life projects. So let's jump to the product market fit, what it is. Very often when startups came to us, I see very common scenario when the founders with a product idea jump straight to the development process, and then they struggle with, figure out how to sell this product on the market. And the problem of the not meeting the needs of the real customer is number one problem why startups fails. Based on CBI Insights research they done a couple years ago, around 40% of the startups fail because of that reason. So to avoid this problem, the ideal flow is when you start with idea, then you validate the idea on the market that the market has the need. Then you think about some value propositions or how you're going to address this need. Design some concept, product concept, think about the business model, then test it, then go to development stage and collect the initial customer feedback, and everything is fine, you can heavily invest in the scaling and iterative improvement of the product. But unfortunately, not always people do like that. So, and when we talk about the product market fit, probably the first mention that I could found about the PFM was Mark Anderson, and he said that I always feel the product market fit is not happening or it is happening. So when it is happening, customers are buying the product as just as fast as you can make it, or as fast as you can add more servers. Right? I'm a more data-driven person, and I always try to transform the feelings into some, numbers, and try to measure and to make some predictions. And inside the company, we look at the product market fit as, when the customers choose your product for the price you ask for it, considering meanwhile that your product is the best option to solve their need, and the market size itself, the gross profit that you can get from the sales volume will cover your capital expenses and operational expenses and initial investments in developing this product. So ideal, crossroad when you have the mix of customer value, huge and big potential demand covering the capex and opex, and customer acquisition cost is lower the lifetime value of the customer at least 3 times. So this is when we can say that we have this sweet spot to place our product and get profitable business. So to understand whether or not you can make this product market fit, there is the so-called the product market fit pyramid. It's methodology that help us to step by step go from the top level where we understand that the problem exists in the customer life, moving to the solution. So what is our value proposition? So how we are going to solve the problem. Then on the specific level of the feature level, so how specifically we going to deliver this value, how the product will works. And then on the user experience level, so how easy is our product to use? So will it be sticky to the customer? Will it stay within long enough to cover customer acquisition cost and increase lifetime value? And it's a framework. So when you work on the new product concept, it may be just a new feature for the existing product, you always can go through it and increase probability of success at the end, because execution matters, but methodologically you need to be at least in a good position at the very beginning. And now we go step by step to understand how we can achieve that. So the problem, chapter 1. How we can define that the problem is worth solving? I always ask our team this question, and our customers ask us. Make some calculations here, we can use a couple of metrics and a couple of benchmarks. So first of all, it's what the percentage of target users reporting the problem. So if at least 40% can tell us that they experience this problem in their life, great, we are moving in the right direction. Then it's a very important factor is how frequent the problem is. So if it happens once a lifetime or once a year, probably it wouldn't be so big to remember that they need to pay for that like all the time. So they will find a quick solution and forget about that afterwards. So ideally, if the problem appears in customer lives weekly or even more frequently, but for the problems with like significant financial value or mental influence, it can be, I don't know, monthly, bi-weekly, annually, or quarterly even. So again, like mortgage or rent payment, it appears twice or once per month, but it's quite significant for our customers. The same as the next metric is the level of pain. So how really painful this problem to the user. So we suggest to use a scale from 1 to 10, when is 1 is absolutely not, and 10 is extremely painful. And if the problem meets 7 and up scale, it's, again, good opportunity for us. And also, it's nice to take a look on the how people try to solve this problem by themselves. So what workarounds they use around this problem? Do they try to find or develop some manual solutions, things like complex Excel spreadsheets, or I don't know, they use Zapier and different kind of tools to integrate into automated workflow and pay for each of this tool and invest their time into solving this problem. So it's great sign that there is, opportunity to offer something better, and people will consider to switch to a new solution. So if 45% tell us that, hey guys, yeah, we do something with this, again, so we are moving in the right direction. So, how to discover these pain points and how to validate that that these pain points is present on the market? First, and one of the most reliable method, if you can say so, is talk to people. So we use techniques of in-depth interviews, talking one-on-one to people to understand their behavior and their needs. Also, we can use some type of the quantitative surveys to quantify the frequency and appearance, again, to support our findings through the in-depth interviews. The next great approach to identify these workarounds and manual solutions is ethnography research that help us to observe how people behave in real life. So, and again, great insights about, tools and methods that they can use to, to simplify their life with the problem that they experience. And sometimes worth to jump into the customer shoes and use so-called moccasins discovery when we are trying to experience the same problem that customers, potential customers have. So by acting as they are and try to figure out how everything works in the real life and where is the most painful stuff. So after doing such research, what we can get as an outcome? So it's a list of need prioritized by recency and painfulness for the consumer. The understanding of what and where users struggle the most with the existing solutions. How customers evaluate and what metrics they use to measure the success of the job they're trying to accomplish. It could be like, I don't know, money, time, efforts, I don't know, some emotional feelings, and so on. Cost of the success. So this is the cost in time, again, in money and other stuff that our customers invest into the solving their job, and really very important thing to know because it helps us a lot with the future pricing. And barriers to change. So what obstacles they will have if they decide to switch from existing solutions to a new one. I don't know, they are locked in some technical ecosystem, or the cost of the migration to a new one will be significant for them. I don't know, a couple of $1,000, and we need to know how we're going to address this blocker and barrier in the future. Sometimes there are a couple of pitfalls you can face. It's first of all, talk to the wrong people, not to the target customer. So we need to be very accurate when we invite people to the in-depth interviews or to the observation sessions. Usually, sometimes startup founders or team members go to friends and family for the advice. And again, friends and family, it's great people and it's very comfortable to talk with, but very often they avoid telling you things that can upset you. make you upset. So again, it's better to go to talk to real customers. Sometimes on the very beginning, we try to pitch our solution rather than assessing the needs of the customer. So during the in-depth interviews or observation sessions, we are there to listen and to see rather than pitch our idea to the consumer. Why pitching is not a great thing? Because uh, for the consumer, it's difficult to understand and to imagine equally what you are proposed to them. So we need to have the prototype rather than in a words try to explain what are in our head and translate it the same way to the other people. So, and we avoid the quantify the problem. So we don't know these numbers that help us later with the pricing and estimation, the cost of the problem for the customer. So the next is chapter 2, value proposition. Let's imagine that on the previous step, we found out that there is a unmet need on the market, and we are ready to offer some solution to this need. So how we can measure that a solution we are going to offer is what customers really want to. Couple of metrics. First one is the percentage of users who say they would use our solution today. If we can get at least 50%, it's a really great sign that we are close to what we need. So also it can be tracked like click-through rates or percentage of users who ask for early access to the product demo. And I also suggest you to focus on engagement, because engagement, it's interesting criteria that help us to understand how really interested people in what we are offering. And if we have prototype quite, detailed on this stage of the value proposition testing, so it can help us to understand which part of the idea is really most interesting from the customer perspective. Again, as I mentioned before, on this stage, it worth to have at least low or mid fidelity prototypes. It could be, I don't know, sketches, clickable prototypes in Figma, or landing pages, sometimes even just intro decks. But also today, AI tools allow us to create a really almost product ready to go look like prototypes if we use platforms like Lovable, Bolt, Ready, or at least plus 10 else we have on the market right now. So testing this stuff and making them available to the public as soon as possible allow us to track metrics like engagement, cost per action. That is really important for us to understand the customer acquisition cost and future lead generation strategy, quality of leads and quantity of leads, conversion rate, and so on. And again, in our prototypes, we can use call to actions like pre-order, wait list, book a demo, get a quote, know more, download, sign up, buy, message, and so on. Again, our main idea is to validate real market demand and intent to purchase or interact with our solution. So let's imagine that overall we validated that what we are going to offer is what people are looking for, and now we are ready to move on the feature level. So understand what features specifically should be on the first place in our product, and we need to prioritize them in terms of the development, and again, be more specific in terms of the monetization. Which metrics we can use? It's percentage of customers that are willing to pay realistic pricing. Yeah, so it's 25 or more. So again, accepting a paid pilot or pre-order, especially if it's a B2B product, so up to 15% of outreach lists are ready to enter a beta waitlist. And what's important to know the end of this testing stage is the customer acquisition cost at least 2-3 times less than LTV of the customers during the 6-12 month period. So how we can do this? A couple of techniques. The first one, it's a so-called concept test. If we have couple idea and we think about different features, different level of the features in the products, so we can showcase couple of the context to the concepts to the customer and try to track such things like attention, interest rate, purchase intent, price value, needs fit, likability, and so on. This is a great qualitative and quantitative methods to get feedback on a product idea. And again, if we have couple of competitive solution inside our team, we can figure out which one is better. And also we can try to measure ourselves close to the competitors. So we can add, instead of the concept 2, for example, we can add competitors that are on the market and take a look on how we're positioning against them. The second method that I would like you to present today, it's a Kano method. So it's really helpful to understand, to prioritize the features which should be, put in the first position in terms of the development. How it looks like: we present to the customer the feature explanation, and then respond then the question: how would you feel if this product that we presented have a specific feature? And we have a couple of answers. I love it, I expect it, I wouldn't care, I can tolerate, I wouldn't be happy about that. After we conducted this survey, we can prioritize and we put features in the 4 buckets. The first one is a must-have, so the necessary by default. So the clients already expected that this is the basic stuff that should be in the product. So if there is no this feature, we'll not consider it anyway. The next bucket is a so-called performance feature. So if feature is better, customer will perceive as a better solution. So it's cheaper, faster, bigger, whatever it could be. So the third one, it's attractive. So it's called nice to have. They give a positive reaction, or sometimes it's wow effect, wow, it's so cool, but it's really optional. So if we put them into the wait list on the backlog, nothing critical will happen. So the core product still deliver the value covering the core need of the consumer. And indifferent, so the features that not affect anyway the customer satisfaction, or sometimes even damage the product perception. So they probably should be deprioritized anyway in terms of the development. The next method, it's a conjoint or brand conjoint analysis. It's a great quantitative method that allow us to simulate the different price points, the prioritize features, and also make a market share simulation. The difference between conjoint and brand conjoint is that in brand conjoints, we can embed the brand value into the assessment, so bringing the competitor's product into the assessment process. So how it looks like, we have a couple of levels and a couple of attributes and their levels. For example, attribute monthly fee level, it's, for example, price 15, 30, 50. Next level, it's next attribute cashback, different level of this cashback, and so on. When people during this method, they compare different options that they see on the screen, at the end, we can see the preferences of the consumers depends on the specific attribute level. So it gives us a clear view that, for example, if we combine 30 USD monthly fee with, I don't know, cashback on the 3 categories plus like 5%, it can give us a great financial outcome, and it will compensate, for example, the in this case, okay, it will be a great balance in terms of between the monthly fee and all other features, so we can get a nice profit at the end. So, and again, it allows us to prioritize on the feature influence, so how specifically this cashback or cash withdrawal in Europe or LATAM influence the perception of the product in the by the customer. So another method how to make a price evaluation is so-called one Westendorf method. So it gives us a great opportunity to understand the price range acceptance from the customer perspective. So we describe the product and then ask consumer about what price of the product would make you consider this product as, and for options. So expensive that you would not consider buying it, starting to get expensive, so you would have to give some thought of buying it. Great value for money, and price so low that you would feel the quality couldn't be very good. And they enter this price, they values there, and at the end of the result, we can see the price range from the cheapest border to the most expensive one, the third, and optimal price point where people are considering the most value for money price for the specific product. So another one, when we have the price range, but we won't like to see the price elasticity and to be more specific what exact price point to put on the market. And sometimes the quantity of customers doesn't mean the profitability for us. So it's more effective to sell a little bit on a higher price, but smaller customer base because of the capital expenses or operational expenses to serve the bigger customer volume. So we can use the Garber-Granger method. Let's imagine we have a price range from 10 to 100. And I ask you a question. Would you consider to buy craft innovation services for 100? You say, for example, no, for 50. Yes. Then I ask you for 80. No. For 60. Yes. And then 70. Yes. So we know that 70 is the price point that you are ready to buy this product. So this is a price point. And again, when we have 400, 1000 answers on this question, we can really have a clear view on the price elasticity, and we can know what percentage of the market are ready to buy our product for given price, so we can make a wise decision in terms of the price positioning. The next chapter is about usability. After we validate the price point, we know features, it's a question about how we deliver value to the customer on the daily basis. So usability is a key factor of product stickiness and retention rate. And if we are not delivering a great user experience, be sure people will switch to another product very soon, as soon as this option will be on the market. So how we make sure that our product is ready to go on the market and we are not going to lose customer because of the poor UX. So the core metric that we use inside the craft innovations is a single usability metric. So it's a really complex parameter that incorporates inside the time, success rate, customer effort score, and error rate, and allow us to understand comprehensively how good the product design is. So if the metric is more than 70, we can say that we can roll out it on the market, but still we have things to improve. But if it's less than 70, it's definitely worth to talk with your UX design team and find out how to improve it. Also, other metrics we can use, it's the task success rate, error rate, and retention of the concept. The last one, it's quite interesting. After usability testing sessions, we ask people about how they can describe the product benefit that they experienced. And if 80% are quite clear about this topic, so we know that, yeah, so we delivered a good result and people will remember the value of the product and will stay with the product longer. How we can get this data? In our practice, we use the moderate usability testing, sometimes with eye tracking if it's a very complex system. Also, it's appropriate unmoderate usability tests for some more simple tasks with the use of platforms like Maze or Useberry or some others. Sometimes it's a heat maps or session replays and definitely follow-up surveys after the interaction. So this is all content for today. I hope you enjoy it. Some special things for you. First one, you can download free product market fit ebook from our website. So in the section of insights, and I have a special offer for people who will see this recording. We have a special terms and conditions on product market fit research and UX audit for you. So just mention the PFM webinar in your email to our company or direct message to, for example, LinkedIn. And this offer is valid until September 1st. So I'll be happy to help you with your tasks. So let's stay in touch and wish you a great day. Thank you.